The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Welcome to the world of very docile instruments that are just kind of moving around slightly on the screen today. Just kidding. Got some volatility. It's here to stay, folks. You know, with all the different unknowns out there right now, how can you not love this situation if you're a trader? How do you price the euro? I've got personally some pretty big bets on the euro going down right now. I don't see anybody wanting to hold euros if they can avoid it right now. It should have gone down a lot lower than it's gone now. Than it's currently going, in my opinion, which is kind of concerning. There's no free lunch out there like, hey, wow, I'm going to get in this trade and it's just going to do exactly what it's supposed to do and I'm going to catch 500 pips really quick in it. That's the only thing concerning about it. I'm looking at the euro. I'm looking at how it bounced a little bit off 110 this morning. Now it's kind of getting below there. The next stop down, this is the weekly number 108.86 down here. Again, the reason I'm bringing up the euro is the currencies, without question. I mean, if you look at the pound, what's going on right now, these are going to continue to move wildly. So, you know, one of the things you can do in situations like this, just kind of, again, focusing on the currencies, you can either go into the futures market and play around with, I like to look at the spot currency numbers and levels. That's, there's a lot of decent volume that e-signal in particular aggregates together, which is what we use as a data source for the scanner. And I'm talking about this little puppy right here. And we give you all these levels, and I think we kind of give you the green shoots and the red shoot situations to try to get some leverage around some of these inflection points. But, having supposedly, and again, this is supposedly, 85–90% of the aggregated volume from quite a few different sources coming into this e-signal feed. I think it's pretty daggone good. I mean, when I went to the Emerging Markets Forex conference in London, what was that, in November? That's always everyone's biggest complaint is how do you aggregate all the information? So, because there's no centralized exchange, you guys know that. I think e-signal's done a pretty good job with this. So if I go into the Forex section of the scanner, and I see somebody in the den so they're buying S&Ps. Yeah, I mean, there's going to be volatility across all instruments. That's the good news. And guys, keeping the powder dry still and waiting and being patient for the right inflection points to be hit and being able to possibly, with the relatively small amount of leverage with these types of moves, be able to kind of make your whole month, then sit back, trade lightly until those opportunities arise again. We'll probably talk about some of those on the show in the morning. It's just a fantastic time to be doing the show, and I hope you guys are going to get some use out of it because I think there are going to be some insane opportunities. But here's the Forex section. Well, if I can move this around. As we look at this, we're going to go down to the euro. If I can find it. There it is. There's that big number we talked about, 108.86. I really feel like at bare minimum that's going to be hit. I really feel like I think we're going to have a weekly, again, this is me with the crystal ball thing. I think we're going to have a weekly close below there by the end of the week. We got the July 4th weekend. I I think that's going to more than likely be the case. And then we're going to have a chance, hopefully, for it to retrace back up into there for that powerful short on that former support now resistance, go back and hit. And again, I'm forecasting something that's possibly 4 days away. But basically, here's where the level of the market is right now. We're sitting a little bit below 110 there. And there's the 108.86. Here's all the profiles here. So you've got the red shoots, if you will, in your favor here. We've broken down below the 240s again. And next big support is going to be at that 108.86 on the euro. The British pound. Let's just go into the E-signal charts really quick here. You know what really ticked me off is I was playing around with some Nadex options last night. And the 7 a.m., I want to show you the 7 a.m. deal. That was right there. Just going to lament here a little bit for you. So I had an option to close below 110 at 7 a.m. And what did it hit it? Let's see. Yeah, it hit 110 a couple of minutes before 7 a.m., before the option closed, and then just bounced up. And they, of course, knew I was, Nadex knows my positions. They know them. Everybody is against me at Nadex on the binaries. On the spreads, no. On the binaries, yes. So here's the British pound. Let's go back to that. If you guys trade Nadex, you know what I'm talking about. As you can see, we busted down through the lows on Friday. So what does that mean? How do you trade this right now? If you're looking at trying to squeeze some juice out of this, you've got Scotland talking about blocking it. You're talking about Scotland leaving. Unknowns. Nobody knows how to price this currency. Nobody knows how to price the euro right now. And we'll look at the dollar in just a little bit, but here's the 240s. Again, this profile appeared well above price action. That's bearish connotations in general. But the only thing you have to really grab onto right now, we broke the 60, 133.67. I mean, these are, what is this? Even this morning, we had a 200 pip breakdown in the last couple hours. I see people in the dinner completely siding with me on Nadex, knowing our position. You know what? I'm just kind of joking about my personal situation, but TT for a while there. I hope Harris Brumfeld's not listening to this show. He owns TT. For a while there, Harris was one of the biggest traders, the guy that owns TT up in Chicago, and those servers. I mean, he obviously had access to where the stops are being placed, because when you place a stop order on your platform, it's not residing just on your platform and everybody else doesn't see it. It's actually up in a server bank being held there, because if your machine goes down, the stop, there's a lot of problems. So we're going to hit this a little bit more when we come back, folks, right after the break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. And I've just put in a special request to, while my show's going on every day, we're going to play Captain and Tennille during the breaks. All right, here we go. Let's take a look at the euro and just finish up with this. We're going to hit the British pound again. But, you know, the euro, this is the good. I mean, we talked about the short term, and we also talk about, you know, using the scanner. And I want to bring out another. Sometimes I will do this when it comes to massive volatility. Sometimes just to I know where the long-term inflection points are, but just to completely focus on, you know, the green or red shoots when things are breaking down, I'll just look at the 60 minutes. So if I'm looking at the euro here and I'm looking at this red 14 and I know my inflection points there's that 110.663. A lot of times I will, you know, put the ones that I'm specifically looking at into a custom portfolio, look at the 60 minutes and just wait for things to happen on the short term. It just kind of allows me to zero in, focus in on that type of situation. We put a lot of cool features in here, in my opinion. I mean, it's definitely to the point for what, you know, we all thought that, and this is with a lot of user feedback too, on what, you know, would be nice to see in here. I know the alerts need to be in here. We've had a lot of issues trying to make that work on the server side. But again, you know, you got a lot of different ways to use this thing, and a lot of times I'll just look at the 60 minute. But talking about TT and Harris Brumfield, the conspiracy that we talked about, you know, if I owned a platform and I knew that the stops that people were putting in on their terminals were going up into the server, and I had a chance to kind of look into the stop scene, you know, you let your mind wander. Let's take a look. Let's go back to the British pound. We talked about this a little bit before, but here's that big 60 minute here. And if you're thinking about trying to catch a falling knife, that's the scary trade. That's the low probability trade. What you're going to have to do now is at least just wait for some new 60 minute profiles. If you'll notice here, in a volatility, high volatility environment, we've cleared all the levels, if you will, the profiles, the balanced areas on the long term. You wait for these 60-minute profiles to appear, then it gives you something to lean against to play defense. And it just so happened that the top of our profile on Friday, just want to, again, review a little bit here, 139.38, that was the big number. And at the same time, that coincided with this 140 general neighborhood. So, again, these are DMZs in a very volatile environment. So you had a big place to play defense, trade a little bit lighter, put your stops in, give it a little bit of a bit of a generous attitude towards stops. And we're literally 1,000 pips almost lower from there. But the thing I wanted to point out is a lot of times these fair auctions are completely explored, and there's really no reason to try to play around in the middle. You wait until we get up here. I think we reached a high of 139.81, so we got right into that DMZ between the weekly unfair low and the 60-minute unfair high. That was the nice thing to lean against. And then you've got some targets down below, and then we're consolidating, and I'm being a complete Monday morning quarterback now. I'm aware of that. But at this stage, when we break down again, you know, you're supposed to be looking at the long-term view. Okay to be short, not okay to be long. If you're going to be long, you know, you can try some things around these inflection points, as you can see there, but the long-term MO right now is to trade with the so-called trend. And right now, you really need, if you're just kind of waking up and saying, wow, God, I want to be in the British pound, you really want to, you know, wait for some new profiles to appear so you can have things to play defense against. And if you guys in the den have any questions, please throw them out there. I'm not able to look in there that often. Let's see here. Okay. So staying on the currency scene for just a bit here. The Australian dollar, now this is one, you know, does this have a lot of relevance to what's going on in Great Britain and the dollar? Yeah, a little bit. But, you know, we've got China talking about the Australian dollar. This is the situation on the Shanghai, all right? The Nikkei hasn't done badly. The Shanghai's kind of gotten back above daily profiles. Is still within a big weekly situation. Here it is. Again, this is a market that's kind of been disconnected from the U.S. market. The U.S. market kind of got disconnected from this. It definitely seemingly doesn't really bat an eye what's going on in the U.K. right now. And that being said, let's go back to the Australian dollar, which is a really dependent country on what, you know, happens in Asia for the most part. So let's take a look at this. Last week we talked about getting a weekly close above 74.81. That didn't happen, and now we're looking at it as a little bit of a lid. You've got this is not a component of the dollar. Those six currencies. Let me just pull back up the dollar here. And, you know, we have the weekly profile this morning. We came back and touched it again. This is a very nice situation. We talked about 98 being the ultimate targets on this for a while. This morning you had a chance to play defense below 95.76. We reached a low of 95.93. So got into the neighborhood. This is not to the tick. You've got to, in volatile times, you've got to be willing to allow yourself to get in and get out around those inflection points. So what do you do with the dollar now, and how's that the Australian dollar, in my opinion, is going to continue to kind of slough off. A lot of the money is going to be going into U.S. related products. And as we look at the 10-year, on that note, this is something, I mean, we talked about it Friday. It's just you got to be buying the pullbacks on this thing. Forget any type of it's too high, rates are too low. You know, this is going to be something, you know, where does money go? Where is money being parked in right now? If you think about it, you know, these guys, the betterments of the world and all the portfolio managers who are trying to match the benchmark, they've got certain rules. And it's all about gathering assets these days. They really, in my opinion, are not as concerned about the downside. If the market goes down, they can always go, wow, hey, the market went down. What do you expect us to do? But they definitely don't want to miss the upside. So when they have that attitude, a portfolio manager, you're terrified of not beating the S&Ps. So therefore, you have to take on the risk of the S&Ps. And if you try to hedge things too much, you'll underperform the S&Ps. And a lot of times these guys, aren't the smartest folks in the world. And a lot of times their hedges may not be appropriate. But right now, where is the safety play? It's U.S. Treasuries. And if you look at this is the 240-minute. We closed above that 132.10 last week. After that move up, we pulled all the way back. We talked about waiting patiently until that 132.10 was hit. We hit it, and we're bouncing up again. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Ooh, what you doing? Ooh, what you doing? Ooh, what you doing? You never done it like that. Ooh, what you doing? Yeah, what you doing?
The captain. Thanks, Val. I feel like I'm back at the disco. All right, so let's take a look at the yen. Now, this is something, man, God, how is this thing not getting devalued right now? Again, safety play, more than double their GDP as their debt ratio. Again, let's pile into a nation's currency that has enormous problems. and sea change situations going on in their economy. And the hint of government intervention sitting on the sidelines to devalue the currency. It continues to get more valued. And this is kind of that opposite chart where the farther the yen goes down, we are looking at the valuation getting higher in the yen. It's kind of the opposite of the dollar situation. So where are we at now? Okay, so on the yen, I'm still not opposed to looking at this from the long side, believe it or not. We went down and reached our targets at 101.33. We're almost back down into that. In fact, I'll expand on that a little bit. We reached a low of 101.40.41. This moved down on the daily. Okay, and you're going, where the heck is he getting these numbers from? The reason I'm getting these numbers, I'm stuttering this morning again. Here's that 101.33. Now, we talked about this a little bit on the show. This was kind of the profile from heck here that lasted 9 months back in 2014. I know this level very well because I played around with it for 9 months. And finally, we got the moonshot, and then we got the breakout and the retest of that area, the top of the profile. And then we were off to the races, and then it's been, okay to be short, not okay to be long, except that 105.50 we started looking at from the long side. I wasn't a big fan of being short this, actually. But now, and if Tucker's watching, I'm going to use his term, this 101.33, which was such a big number, we pierced it. We got some people out. Harris Brumfeld was watching. We came back and retested that 101.33. That's a big deal, all right? I'm nibbling here on the long side, believe it or not, with stops below that 101.33. We got the close above on Friday. This is our daily. We retested it. This is a little bit of a scarier trade than I normally do. And Halloween is not on the horizon here, so we're just doing a scary trade just to do a scary trade. Actually, folks, 101.33, I got stops below there. I'm personally in this. And if we get stopped out, we get stopped out. Dims the brakes. All right, so we looked at the 10-year, we looked at the euro, the Aussie dollar, British pound, the whole 9 yards. You're just going to have to wait on the British pound now. Gold. I'm kind of amazed that wait a minute here. Let me make sure of something on gold. Yeah. Okay. I'm a little amazed that we got up into this 1340 top of the profile in the 240 and just backed off. So where do we go? This. Let me go to our 60-minute for a second here, folks. So what do you do with gold? You've got some support around 1326 now. You got a little bit of a lid at 1340. I'm a little shocked that gold's actually not moving up again, but the way you can look at this, I'm terrified to go short gold right now. The way I'm looking at this is we're making higher lows, we're compressing up into 1340, and you've got to look at that as a breakout situation. So again, what do you do with gold? I think you got to sit patiently here and just wait for the breakout. I'm not terribly excited about going short this. Here's the daily on gold. Again, this is kind of okay to be long, not okay to be short. So you're looking for reasons to get long again, either by buying breakouts or buying support. Support being 1326.27 downstairs. We got to take a look at crude. Let's see here. Oh God, people are saying in the den they're doing what I'm saying. Oh Lord. Thanks for putting the stress on, guys. Here we go. I'm just kidding. I think that's a pretty high probability situation with the yen. But again, you get clipped on that for a small amount. You're looking for 400 pips on that trade. I'll take that deal all day long. That's a great risk reward scenario. On August crude, this is where, again, you got a big time trading opportunity around 45.66 on crude. It just hasn't happened yet. And we've broken down below this 47.58. So you're looking for those weekly unfair lows, and those weekly unfair lows, if you go into the scanner, and you go into the futures section, and you go to WTI, and by the way, we have got one of the best teams working in the background on this scanner. There are so many. There's quite a few folks watching all the global interests. I know you guys are probably focused on, and we pretty much do this show on futures, forex, and U.S. instruments. Michael Ceballos and John De La Paz in the background make all this work, and they are dealing with people in Japan, Australia, Europe, the whole 9 yards. They keep all these instruments balanced and keep all these servers working. So I got to tip my hat to those guys. They do a great job. So here's WTI crude. There's that big number, 45.66. As you can see, we're kind of red shoots across the board here. But again, that's the big number. And if you see that arrow up in the gray cell and that 11, that means we've been in an uptrend for 11 weeks by definition. We're in the balanced area. And if we get down to 45.66, even though we've got those red shoots, that is a buy point to continue the trend up and kind of turn the rents the same way in the trend. All right. Well, we got an ugly situation without question on the stocks here. We're going to take a look at the S&Ps in a second. But as we talked about last week, where do people hide and where's the big bang for your buck? Before all this happened, we talked about the utilities, all right? And we talked about, buying the strong of the utilities, leaving the weak alone. But if you're going to do a pairs trade, you know how to do that. But as we look at the XLU, this is still your support here, 49.88. I really don't see in this volatility, even if the market rallies significantly, I don't see the XLU coming off. It's still going to be the go-to group. The thirst for yield situation against the 10-year and all the other treasuries. You're getting a dividend here. This is, probably like watching paint dry compared to trading Amazon and, the Netflixes and the Teslas of the world. But again, boring might be good these days. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we talked about the XLU. Let's request from the den CYB on the ASX. So this is kind of cool. You guys do some global news reading, especially on stocks. The good news is you can come in here and actually find those stocks. ASX, you're going to go into that little puppy here. And what was the stock? CYB? CYB. Is there, let me see here. Okay. I see what you're talking about. Let me go into CYB. Wait. CYB. There we go. Let me check the... Let me look into that after the show, RJP. I'm not well versed in the Australian stocks like I should be. It's not, yeah, that's the wrong symbol, sorry. This might be it. RJP, I'll get with you after the show about that. I'll stay in the den. Apologize for that. I'm not exactly sure about that symbol. It's in the scanner. I don't know what this symbol. We have to do another thing that John De La Paz and Michael Ceballos do is they do a lot of cross symbology translations. So I gotta, yeah, RJP. We'll get back to that. Okay. And it's not exactly the same in e-signal sometimes as it's in our scanner. All right, so let's go to Big Mama here, the S&Ps. All right, so you probably, okay, this is my opinion on this. You had the Muhammad Al-Arian guy come on and a couple of the other talking heads and like, this is a orderly sell-off and no big deal, and our the Globe's transactional servers acted very well. And then actually somebody asked about, when the margin calls start affecting this. They're not affecting it now, and you haven't seen that. All right. So bottoms, as you guys know, are usually predicated from just some real serious violent activity, not this orderly situation. An orderly situation means people are just kind of walking out. They're not running out. So you want to see people run out as a bottom. And when you step back, I mean, I can't believe we're talking about, I can't believe the word bottom came out of my mouth, because where are we at right now? We're basically, what are we, 4% off all-time highs or something? So, before we start turning around, if you're already looking for that after a week sell-off, you're going to want to see the violent activity. I'm talking the gaps, the fear, and you want to see the non-orderly activity, and this ain't the case right now. The good news is you've got this 2033 to lean on the short side, in my opinion. I tried to play around with that on Friday. It didn't hold. And then we got back down below there, but the daily, you don't even have any new information down here. So in my opinion, you could still have some free fallish type action. Here's the 240s. You got a lower number you can focus on here. 2023, that 2033 is going to be a huge number. But again, I think that's where the lid is right now. 33 being a bigger number, but I'm not exactly interested at all. And if you look at the S&Ps and go back into the breadth calculations, and again, we're getting a lot of shift overs this morning. Weekly and daily breadth are negative. We've had a lot of new profiles become in force on our stocks. This morning, you'll see that on a lot of different stocks. You'll see new weekly profiles, which are now in force. You've got some individual instruments being stocks, inflection points on the long term to pay attention to now. But considering that this is all negative and considering that we've got a decent inflection point at 2033 that we actually close below, remember weekly closes, those are huge. The retest is the big trade. So that's where you're going to orient stops, in my opinion, on the S&Ps. And again, currency fluctuations that are happening right now and are probably going to be happening for a while because nobody knows how to price things. Those are usually predicates of market sea change turn events. You've got those in force right now. I think the S&Ps can go a lot lower, but again, put your stops in. Nikkei hasn't acted terribly bad at all. Shanghai, we covered that. We covered gold a little bit. I think silver, we had a little empathetic, sympathetic move up here. 1758 is now your support on that. I'm not a big fan of going short gold or silver right now. Currency fluctuations like they're happening right now. I think gold's got a bid in it. It'll keep a bid in it. Even if the market rallies right now, being the equities market, I think gold's going to continue to keep a bid in the marketplace. Why in the world would that not be the go-to scene for a while? Let's take a look at the financials. This is one that, we closed right on that 2208, 2204 weekly unfair lows. We talked about that was the original targets on this particular trade. Not a big fan of being long this. This morning we're trading 2165. It looks like pre-market. So, where's your stops oriented situation on the XLF? You've got a lot of banks. I mean, I think Royal Bank of Scotland, RBS, is off 25% today. That's not a small move. A lot of the banks are looking at, a narrowing yield curve. That's without question to say that. They've also got to worry about how do they price things across the globe in these, global multinational, the JP Morgans of the world, the HSBCs of the world, the Deutsche Banks. The financials haven't exactly acted that well lately, and then this happens, and I think 2204 is going to be your resistance point on that with stops above. All right. Okay, just looking at the DIN, making sure we're caught up in there. Basil is in the house. Man, I love listening to his show. Incredible information he gives on a day-to-day basis. I always check with him to see if I might be right when I watch his show. Great stuff, Basil. Okay, we're going to take a look at a couple of the bellwethers here, Apple in particular. We talked about ultimately this thing getting down to 91.76. This is one I think, I hear the music. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, had a request for natural gas here. This is the July contract. That's what I show as the continuous contract on eSignal. I don't trade natural gas myself. I got scared out of this years ago. Okay, so as you can see, you know, we broke stride here. Okay to be long, not okay to be short. Used it as support. This is what I'm talking about, these powerful trades that kind of break out and then the retest. There's that inflection point there. Here's the ones you got to pay attention to on the daily. 2.639, kind of rallying off of that this morning. Don't see any real reasons to take off the long trade right now. Here's the 240s, kind of regulation of the trade up. We're breaking out on that one too. So is that good enough on natural gas? Whoever asked for that, I can't remember. Was it P? All right. Okay, so we were kind of finishing up with Apple. Here we go. So again, the big number 91.76, that was the targets for the shorts. You know, we could have a little bit of a trade and bounce down here, and that would obviously bode well for the Nasdaq being a large component there. But again, I'm just not a big fan of buying things right here. I think this has been way too orderly when it comes to an impacting event like this, and you can look at it two ways. Well, nobody's really totally running for the door. We've just come off all-time highs, 4% or so. Or you could look at it as, you know, the U.S. stock people are not exactly in fear mode yet. So I think we could come off more. I'm not a big fan of buying anything right now. Let's take a look at the Facebooks of the world here. Okay, wow. Finally, now had that weekly close significantly below the 113.64 relative to what it had closed the previous week. Again, I think to be short this stock is probably not the best thing in the world. You got to wait now until we get back above 113.64 to buy it, or get down to 103.59. I don't like how we're below profiles on the daily, and we're kind of in the balanced area here. I don't see a lot of leverage playing around with Facebook right now. Let's see how the Teslas of the world have acted in the middle of this. Oh, interesting. Down again. Here we go. 190.50. Again, this is the 233 was the big lid there. Obviously, that Solar City purchase put a little bit of a ding in their pocketbook. Don't think it's time to buy this at all. You got to wait for new profiles down here on Tesla, if anything else. Got to tell you an interesting story before we leave here. I went down to the beach this weekend, Atlantic Beach, Morehead City. Look it up on the map. Was out there body surfing. Guy got bit by a shark right in eye shot of me. Look it up. It's in the news. Very wild. I won't go body surfing for a while. 2 people actually got bit. True story. All right, to sum it up, let's hit the S&Ps one more time. Again, the big numbers, the long-term numbers, big-time resistance 233. Short-term number 223. Not a huge fan of being long this, so I'm looking for rallies to sell rallies on the S&Ps. 10-year, in my opinion, is still one of the best trades out there. We've already hit support. Excuse me, we've already closed above support on the daily. The weekly is just out of control. Thanks, guys. Larry's going to be next. Stay tuned for all the hosts on TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.